From the significant decline in interest rates to rising inflation, we bring you the latest economic updates for the month of January 2024.
Hi, I'm Zaima Jihan and welcome back to the First Capital Monthly Economic Watch. The Sri Lankan government and the World Bank have entered into an agreement for $150 million in funding to enhance the robustness of the country's financial sector through the Financial Sector Safety Net Strengthening Project. Additionally, a separate agreement between the World Bank and the Central Bank of Sri Lanka has been established to outline the implementation details of the project. The primary goal of this project is to enhance the safety net of Sri Lanka's financial sector with a specific emphasis on the Sri Lanka Deposit Insurance Scheme overseen by the Central Bank of Sri Lanka. On the government securities side, the secondary market began the month with a mixed and lackluster sentiment, prompting investors to adopt a cautious approach. However, as the month progressed, buying momentum steadily increased, particularly in short to mid-term maturities spanning from 2025 to 2028, driving yields below the 13% mark. Notably, the last T-bill auction witnessed a decline in the weighted average yield rate below 13%, leading to a notable decrease in short-term tenors 3-month, 6-month, and 1 year, which closed well below the 12% level in the secondary market. In line with the declining trend of interest rate movements, AWPR decreased below 13% and recorded at 12.25% towards the end of January. Meanwhile, private sector credit for December 2023 displayed a considerable uptick of LKR 97.5 billion compared to November 2023 amidst the dip in rates. Further, state credit too inclined by LKR 206.9 billion relative to the previous month. If we look at the inflation for the month of January, month-on-month inflation was up by 2.9%, while the year-on-year inflation increased to 6.4% in January. Year-on-year inflation of food group increased to 3.3% in January, while non-food group increased to 7.9% in January 2024. Analyzing the month-on-month inflation, expenditure of food items contributed 1.2%, while non-food items contributed 1.7%. Within the food items, increasing value changes were mainly reported for vegetables, big onions, fresh fish, fresh fruits, and green chilies. Among non-food groups, increase in value changes were mainly reported in housing, water, electricity, gas and other fuels, transport, restaurant and hotels. Meanwhile, NCPI for December 2023 increased to 4.2%. Foreign reserves significantly increased by $821 million to $4.4 billion in December 2023, aided by the loans from multilateral lenders. In terms of the government securities, there were LKR 609.9 billion worth of maturities during January and new issues through auctions worth of LKR 659.2 billion, creating an excess of LKR 49.3 billion. CBSL holdings inclined by 12 billion in January and ended the month above LKR 2,700 billion. Moving on to external sector performance, trade deficit mounted to $487 million in December 2023. In terms of exports, earnings from exports decreased by 6.2% to $101.8 million in December amidst the decline in industrial exports and mineral exports. However, earnings from the exports of agricultural goods improved in December 2023. Within the subsegments, garment exports, exports of gems, diamonds, jewelry, and animal fodder experienced sizable decline. In terms of imports, import expenditure increased by 4.4% year-on-year to USD 1,488.6 million in December 2023, mainly due to the increase observed in imports of investment goods and consumer goods, partly due to relaxation of import restrictions. Within the subsegments, importation of food and beverages, telecommunication devices, home appliances, and household and furniture items exhibited a sizable uptick. Worker remittances too continued to expand year-on-year to USD 570 million in December 2023. Earnings from tourism for December 2023 increased to USD 269 million from USD 127 million of December 2022. Accordingly, balance of payment for January to December 2023 period was recorded at USD 2,826 million compared to January to November 2023 period, which amounted to USD 1,908 million, resulting in a net inflow of USD 918 million for the month of December 2023.
In terms of tourist arrivals, the total arrivals for the month was recorded at 208,253, displaying an increase of 103.1% year-on-year, recording the highest arrivals for the month of January in 4 years. Commencement of the peak season, improved air connectivity, and favorable local conditions were the main contributors to this development. Accordingly, key source markets during January 2024 is topped by India, Russian Federation, the United Kingdom, and Germany.
In terms of the currency movement, LKR significantly appreciated against the USD on a month-on-month basis and stood at LKR 317.4 towards the month end, while on a year-to-date basis, LKR strengthened against most of the major currencies, including Japanese yen, Australian dollar, and the euro. Finally, moving on to the global market, a positive sentiment persisted among most of the major indices, which were seen thriving in the green during the month. So with that, we conclude the monthly recap for January 2024, and stay tuned for more updates in the future. Thank you.